What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is November 17th, 2021. Hope everyone had an awesome session today. Today we are going to talk about the price action, the indices. Price action is getting a little bit wonky. Things are starting to look a little bit risk off. So we're going to talk about that and how I'm handling this market action. Before we jump into that, quick first disclaimer, nothing in the video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's dive in, team. So box scores for today. We had the S&P 500 finishing up 0.24%. We had the NASDAQ QQQ, our big winner for today, up 0.05%. We had the IWM small caps finishing down 1.31%. Absolutely getting sparked today. So the small caps rally that we had in the beginning of November is really being challenged. And then we had the Dow Jones trading down 0.57%. The volatility in all of these indices moved to the upside in a major way. So you can see the VIX was up 4.52%. Dow Jones volatility increased the most at plus 6.96%. And then the breadth was just horrible today. The market opened, it was just like, oh my gosh, less than 30% breadth and everything. It was really bad. And yeah, the NASDAQ at one point was, ripping to the upside, but just on literally like 3 names pushing it higher. So, excuse me. What I can gather from that is the market is selling off. So like even the NASDAQ that was positive, the NASDAQ is selling off. 63 stocks were down and only 36 were up. It really just has to do with how these different stocks and the indices are weighted in terms of their market cap. It's making these indices look a lot better than the underlying price action. Let's take a look at our heat map, and you'll see that further illustrated. So we had Apple up 1.65%, nice relative performance. We had Tesla, this stock just won't go down, won't die, even though the CEO is selling the stock. So that just goes to show like what a zombie market this is. It's like Elon Musk selling, buy. Like it's just crazy. So yeah, we had those moving to the upside, but then when you look at everything else, like these financials really got hit. Nvidia got hit today. It reported earnings. Let's take a look at Nvidia. We'll check that one out. The energy complex also got hit. So let's take a look at what we had. S&P 500. Yeah, finished down 0.23%, closed right around this 5-day EMA, and my trend model actually flipped from a +3 to a +1 at the close. So when my trend model flips, that tells me, hey, I need to be a little bit more cautious, not just going crazy, adding new positions, because, from a +1 market, that's how you can get to, a -1 market or a 0 market, or even worse. Let's take a look at the hourly chart. And you can see we are trading right at support. So we have this weekly value area high at 4682.25. And we just keep knocking on the door. So it's really like, we hit this a couple times last week. Last week we had the correction that was a little bit deeper. We went all the way down to about 46.27 at the lows. And yeah, you can see, we just keep knocking on that door again. At some point, are we going to cascade through? It seems pretty likely, given what volatility is doing. I mean, maybe they're somehow able to hold this here, but it just doesn't really seem likely. So I'm fully expecting, some downside in the market, and I just want to make sure that I'm prepared for that, mentally and, positioned for it. NASDAQ up 0.13%. You can see the NASDAQ is also knocking on the door of new highs. It's very odd because, the big concern in the market is inflation. You would think that the NASDAQ stocks might not do so good in an inflationary environment, but sure enough, we have a few mega cap tech companies that are pushing higher, and that's really helping the NASDAQ. And then we had the Russell. The Russell got sparked today, back down to this 20-day moving average, or just about that. And what's interesting is ever since we came off the bottom in, I believe it was October, all of these indices, they've just been riding well above the 20-day moving average. The Russell was basically like the last one to break out. Like literally, look at this weekly chart. So like the Russell had been consolidating for like 9 months, finally broke out, and it's the first index to pull in hard. So what that tells me is like the breakout that we just had, you know, maybe it was just due to that seasonal push, and we were able to take advantage of that and capitalize on that, which is great. But yeah, the market is really just, you know, selling these small caps off, you know, without any worries. And then the Dow Jones is also slipping actually below the 20-day moving average. So, you know, can a couple of these mega cap tech companies keep pushing us higher? It could happen, but it seems like at some point, you know, the weight of the market kind of takes over, and then, you know, you end up getting the sell-off. So that's really, you know, what I'm seeing at the moment. Let's take a look here. Oh yeah, we had Nvidia report after the close. That's going to be big for sentiment tomorrow. And let's take a look at what it's doing. And Nvidia, it looks like the premium sellers had a nice win today, because you can see we're still trading inside of this weekly value area. So Nvidia, I was taking a look at the numbers, had a really awesome quarter. You know, they beat on their sales and earnings. You know, I believe they've raised guidance, like, you know, really good quarter. But it's just, you know, Nvidia, everyone's been bidding this stock up, you know, for the last like 2 quarters. So as you can see here, even in the after hours, it's kind of like it's not really getting a meaningful push to the upside. Right now it's trading at 34 or 304 and change. 304 and change is where it opened earlier today. So yeah, basically no move for Nvidia. Let's take a look at our sectors and style factors. Whoa, my voice just went out on me. All right. Sectors and style factors. So we had, when you look at this, you can really see the carnage under the surface. So look at some of these areas that really got hit. We had emerging markets, internet and e-commerce down 2.77%. Mobile payments was down 3.32%. Some of these ARK funds were down big as well. And KWeb, which was just starting to show signs of life. KWeb, I do have, you know, exposure to KWeb. I'm overweight KWeb right now. And KWeb, this one has just been like funny throughout the year. Literally every time it's going to break out, it's just like, oh, and then sellers step in. So yeah, I had a couple positions in KWeb, and I have an earnings trade on in Futu. And those basically got blasted today. You know, it's not really that big of a deal. My KWeb options are out to September of next year, but at this point it's just like kind of like comical like how this just keeps happening. And I noticed that, you know, this will happen when something's trying to break out but there's really like no rush at all. Like this happens so many times in the small caps. Look at this. So I remember I was waiting for this breakout. It was like, all right, here it is. And then it was like, poof, we just got blasted down. And it was like, all right, here's another shot. And then, you know, got blasted down again, blasted again. Even here, I remember this. I got shaken out of a little bit of my Russell exposure, and I added it back on this green candle right here. But yeah, like it was like, all right, now we finally got the breakout. And then it just got blasted lower for 2 days. And then it ended up breaking out, and then sure enough, it's getting blasted again. But I kind of see KWeb in that same exact way where, you know, it's never fun like coming in and just being like, oh man, those calls I bought the other day, you know, are down. But yeah, they're for September. What I'm curious to see is if we make a higher low here. Right now we held above this monthly point of control, and we're above the 20-day simple moving average as well. Oh yeah, and we can't forget about our crypto. So crypto, on the way out of the market correction from September to October, crypto led the market higher. And that was one of the indications for me that made me a lot more bullish on the market. Now crypto is really like the first to break down. And Bitcoin and Ethereum both pulled into their 50-day moving averages. And what I'm observing today is there's no rush to bid these back up. A lot of times when they break a technical level, you know, everyone will just kind of take their time. You know, there's probably still some players getting liquidated because they just went like all in on leverage up at like 69K. So yeah, once you get those weak hands that are coming out, these strong hands, they can just take their time. So this also is giving me an indication of it's not exactly risk on when Bitcoin, you know, can't even really manage to bounce. And then of course we have Ethereum doing a bit better. It's up 1.97%, but still basically the same chart. Now let's check out some of these other ones here. So what else got blasted and what performed well? So we had the gold miners up 0.79%. Consumer discretionary was up. The global auto is really just because of Tesla. But even some of those autos names, like Rivian, for instance. Rivian, yeah, it was down 15% today, which granted, that's not too crazy considering the path it's been on. But yeah, it's still a big move to the downside. Lucid finished the day down 5.35%, not nearly as bad. So yeah, Lucid, definitely one to continue watching. And then what do we have on our style factors? Style factors, yeah, every style factor was down today. So it's funny, like when you see the headline indices, they're either like flat or just a smidge down. You look at this data and you're like, wow, there's a lot going on under the hood. So cyclicals were down 1.13%. High beta was down big, down 1.04%. And the areas of the market that lost the least, we had min-vol down 0.32%. We had growth down 0.21%, and we had defensive down 0.38%. So this is about as risk off as it gets. Yeah, and then high div, low vol was only down 0.16%. So it's basically get out of all the risk on sectors, you know, and get out of less the risk off sectors. Seasonality. So we are right here, and to be honest, you know, we're actually like a little bit further along. So we already passed the middle of the month. And then we have options expiration on Friday. Could we end up getting a downdraft, you know, in accordance with the seasonality? A little whoopsie? You know, it could definitely happen. So I'd make sure you're prepared for that and that you're not going to be, you know, just like ruined if the market has a little correction into the end of the month. And then I want to actually flip over to this. I keep this in the slide deck and I just pull it out, you know, at times when it makes sense. Wisdom from a market wizard. This is from Mark Minervini's book, and he has here, in the stock market you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You get to see the market's cards before you bet free of charge. This is a wonderful advantage, yet few exploit it. And then he also put this one, the Achilles heel of most gamblers and speculators is the desire to play every hand, a common human weakness that allows impatience to override good judgment. So that's really the takeaway from today's video. You know, don't feel pressured to play every hand. You know, right now, I just don't see the deck being stacked in my favor. And, you know, that was reflected in my trading for today. So what did I do today? So I put out, you know, this was in the morning before the market even opened. I was like, okay, I'm going to cut some risk. So I closed out of my BKKT. I had paid 20.78, very small position for me, and I cut it for 20.02. So it's just, hey, let me lighten this up. You know, let me pull this cash in, this risk in, because if the market pulls back, then I'll have that cash to use. And another thing that I did, yeah, so I tried day trading IWM when it was really, you know, at the time trading on the lows. Entered some November 26, 236 calls for 303. And I closed out half of them for 304. And I said this position went against me initially because it was like as soon as I put it on, IWM just like took a further dive. Like, so yeah, went against me initially and struggled to claw its way back to break even, taking some size out of it. So this was a 1-star trade, which is a very small trade for me. And then I took an additional half off, you know, at like a 1 penny profit, because it just looked like so heavy. And then I closed out the remaining half of it for 270. I paid 303, so took a small loss there, and I just put, can't even manage to balance. So once that happened, I was like, all right, there's nothing there for me, you know, for today in the market. Like, I can't even get a balance in the small caps or anything. So yeah, from that point on, I just didn't trade anything. So yeah, when the market is not really doing, the right thing in terms of just being long. It's okay to be on the sidelines, and that's always the perfect time to really, upskill, develop new tools and just kind of work on your trading. So like I added this little ATR indicator into my screen here, and then I can also see, like, based on the day's move, was it like a 1 ATR move, 2 ATR move, etc. So yeah, I was just working on some little things. I'm also working on a video for Pristine Capital members, really just more on risk management and the mathematics behind your trading business. Because if you don't know the mathematics behind your trading business, you're never gonna make it work. Like, it's really like your losses are expenses and your profits are your revenue. So you have to make that equation work where your expenses are lower than your revenue. And this video is going to be all about that. But yeah, let's take a quick look at our options order flow before we wrap for today. Yeah, I think we're just going to have to keep taking it, day by day and see how the price action plays out. Let's take a look. Yeah, and oh yeah, one thing I will note. So I'm long some of these crypto miners, and BidF continues to be very strong. Wow, I didn't even realize that. Closed up 1.54%. So yeah, BidF after reporting earnings, even though crypto is very soft, it just looks like players are continuing to buy this one. And that is in comparison to, Hut 8 Mining down 2.95% today. Mara, which is down another 7.98%. That is in comparison to Riot. So definitely worth noting that relative strength. Bitfarms is currently my biggest position. Now let's take a look at our options races. This is brought to you via VigTech. All right, let's see if Tesla's going to do it to us again with 10 billion of premium. No, I don't think it will. Let's see. Yeah, we got to take a look at Tesla. I completely forgot about that. So we had Tesla, 7.8 billion, SPY, Amazon, Ford. See, there's not really any newcomers on this list, although APO, that's a newcomer, and Triple M as well. Let's take a look at those. So Apollo Global Management, pretty interesting. Financials name, private equity firm, pays a 2.64% dividend. So interesting that we had some flow in there. And then Triple M. Yeah, this one chart looks like a train wreck, but yeah, this is an industrials company, so yeah, I don't know what someone's going for there, but I probably won't be touching that one. Let's take a look at our TradeScape. Oh yeah, we have to look at Tesla. So Tesla somehow is trading above the 20-day moving average. Maybe with Nvidia being strong tomorrow, if it is strong, maybe we get a run in Tesla, but it just seems to me like it's playing with fire at this point. I don't know. Let's take a look. So we had Ford. Wow, so we have January 2022 options going up the 7 strike. January 2022 going up at the 10 strike, 14 strike. Wow, everyone's getting bullish on Ford. Wow, yeah, and Ford, this chart looks great. So yeah, I'm going to add this one to the watch list. This one looks really good. And we're going for it today. Lucid. Yeah, of course, we're seeing the call flow. We already looked at that one earlier. A little bit of a pullback for Lucid. What do we have here? We got some PayPal. We got some... Oh, yeah, Apollo. So for January 2022, the 55 strikes, the 40 strikes also for January, 50 strikes for December, 42 strikes for January. So these are a little bit out in time. Okay, and right now we're trading at 75.50. So these are really high delta options. Looks like more so just players positioning in the stock. But yeah, I really like this. So Apollo is going to be on my watch list as well. So let's leave it off there for today. Hope you all had an awesome session. I will see you all tomorrow.